Folks, I want to talk about the next big megatrend, a megatrend that many of you may not see coming and may not even know what it is. Have you guys ever heard of ESG investing? Do you guys know what ESG investing is? Well, ESG stands for environment, social, and governance, all right? And right now, the next wave of investing is going to be ranking high in addressing these three factors, addressing the environmental issues, social, and government issues. Now, ESG investing is the integration of the environmental, social, and government factors into the investing process. Using ESG factors or an ESG framework, investors can select companies in which to invest that follow those frameworks. Specifically, ESG assets are screened for certain environmental, social, and corporate governance criteria. Now, to give you a very basic example, all right, companies from industries such as adult entertainment, alcohol, tobacco, weapons, fossil fuels, gambling, nuclear power, they're excluded. Now, there's others, but those are just some basic criteria to give you an idea of what ESG investors are not looking for. So why is ESG investing so important? Well, investors want business leaders to focus on ESG, or the environment, social, and government metrics. That means progress on ESG isn't just nice to have anymore. It's something that shareholders will demand, because they believe it's going to drive everything else that they care about. Growth, market share, profitability. Especially with younger investors with strong sense of responsibility for the green environment. Now, how do you know if your favorite company is an ESG company? That's a very good question. There's a financial company called MSCI. They created an ESG rating scale. That's right. Rating scale aimed to measure the company's resilience to long-term, financial relevant ESG risks. Factors taking into account, these are the environment factors, climate change, natural resources, how about pollution and waste, environmental opportunities, social, human capital, product liability, stakeholder opportunity, social importance, government too, corporate governance, corporate behavior. Now, you may be asking yourself, Roger, this sounds really good, and you're right, investors are getting younger. How do people right now take advantage of this metrics, this score? How do we get into this right now? Well, you could find individual stocks, or you can use ETFs. Remember, ETFs are exchange-traded funds, and there's a couple of ETFs that take this criteria already into account. One ticker symbol is ESG. That's the ESG Flex shares. Another one is ESGV. That's the Vanguard shares. So you've got two ticker symbols, ESG and ESGV, to get you started with this ESG investment. And again, you're going to be hearing a lot more about this in the next couple of months, especially with what's happening in the market. You've got a lot of younger investors putting their money in, a lot of green investors, people who are much more socially aware of the environment and want shares to function within that clean type of an environment. So ESG is here to stay. You're going to be hearing that word quite a bit. And again, if you want to invest in ETFs that cover the ESG scoring metrics and keeping you out of all these industries that I mentioned that are off limits, your best bet is to go with the ESG ticker symbol or ESGV. And you can also look at the constituents that make up these funds so you could see the individual companies that tend to follow this criteria. Or you can go to the website, the MSCI website. Just go to Google them and you'll find the metrics. I think the scoring metrics uses 400 to 500 different metrics to find ESG companies. But again, ESG investing is here to stay, and you're going to hear a lot about it, and I want to bring this to you and make sure you're aware of all the factors that are involved. Hope that helps.